All right, in this explainer, we're going to document a single market DNA trading cycle for the S&P 500. We're going to follow it right from the beginning, the initial plan, all the way to its completion, just to see how everything actually played out.
Okay, let's dive right in. The specific cycle we're looking at is identified as SP500_2_4. Our goal here is really simple. We're just going to walk through the sequence of events exactly as they were recorded from start to finish.
So every cycle kicks off with phase 1, which is called the plan. You can think of this as the blueprint, right? It's where all the initial parameters and the expectations are set before a single thing happens in the market.
The cycle officially got underway on February 1st, 2026. As you can see, the price at this moment is right at what's called the M level, and that serves as the designated entry point for this entire plan.
Here's the core of that plan. The asset is the S&P 500 index. The target entry price was set at 6,828.68. The trapezoid time, which is the planned duration for the cycle, was 25 days, and a risk coefficient of 2 was used in the calculations.
Now, based on those initial parameters, a risk preview was generated. Working with a hypothetical capital of $100,000, the plan allowed for a maximum drawdown of 5%. This all led to a calculated trade size of 0.79.
Now, it's important to note this. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. With the whole plan in place, 3 potential price targets were laid out. Target 1 was at $6,874. Target 2, which is also the apex end level, was at $6,937. And the final target, T3, at the trapezoid top, was pegged at $7,009.
But here's where things got interesting. This cycle didn't just follow the standard 1, 2, 3, 4 sequence. In this case, the market took an alternative path. The phases actually occurred in a 1, 3, 2, 4 order. Let's take a look at how that happened.
And here's that first deviation, right away. Just one day after the entry on February 2nd, the price shot up and reached the in level. This event marks the occurrence of Phase 3, happening before Phase 2.
Then, on the very same day, the price touched the mirror delay, which corresponds to Phase 2. So, right out of the gate, we've got this unusual 1-3-2 sequence of events documented. Pretty wild.
After that quick flurry of activity, the cycle continued to play out over the next several weeks. And eventually, it reached its final conclusion, which is designated as Phase 4 completion.
And there it is, the cycle officially concluded when the price reached the upper boundary of the trapezoid. This successfully hit that planned T3 target, and that marked the end of this cycle.
Okay, so now that the cycle is complete, we can do a side-by-side comparison of the initial plan versus the final results. Let's see how the plan numbers stack up against what actually happened.
This comparison is pretty revealing. The realized return was 5.435%, which is more than double the planned 2.28%, a really significant outperformance. Risk was managed well too, with the max drawdowns staying under that 5% limit. The biggest difference, though, was the time it took. The cycle ran for 72 days, nearly 3 times longer than the planned 25 days.
So what does that look like in dollar terms? Well, that 5.435% return on the hypothetical $100,000 in capital translates to a total realized profit of $5,435 for this one cycle.
And before we wrap this up, just a few important disclaimers. Please remember, this analysis is for public documentation only. It is not financial advice. The model prohibits using leverage above 10, and you should never invest essential personal funds.
And that concludes our documentation of this market DNA cycle. We saw the initial plan, we followed the alternative path the market actually took, and we reviewed the final performance. For more information, you can always visit the website shown here. Thanks for watching.